The average price of houses sold in the U.S. in the first quarter of the year was over $500,000. So can you afford that? It's a big question. Here to explain how much house you can afford, we've got Ross Mack, host of the Financial Freestyle podcast. Ross, good to see you. Let's start with this basic principle. How much money is recommended for Americans to spend on housing costs? What's the general rule of thumb here?
Brad, my man, it's great to see you. So look, when you're talking about the general rule of thumb, right? If you're going into a house, right, one of the things you're going to say is what type of mortgage am I going to get? What type of loan? And so if we're going to assume a conventional mortgage loan where you're putting down, right, as a down payment, maybe 5 to 20% of the actual average housing costs, right? But not just there, right? You also got to think about the closing costs. So one of the things, right, if we're using, call it 437, which is like the median household cost right now, you're talking about roughly 21,000 over 80,000 just for the down payment and an additional 13,000 or so for the closing costs. But I always want a person to work backwards, right? Because when you take into account, and one of the things I've been talking about recently is like, that American dream is getting a lot more pricier, right? Because if you have $100,000 salary, believe it or not, you're actually only able to afford a home in roughly 16 states right now when you start taking into account a lot of the things. And so if you say I make $100,000, it's kind of a rule of thumb that you don't want to pay more than 30% of your gross income. So making 100,000, that means you're spending $30,000 annually, right? If you back into that, well, guess what? That's $2,500 per month. And now, right, when you look at that, there are a lot of other hidden costs that come with that, such as, private mortgage insurance, other maintenance costs, right? Taxes, et cetera. So, I think it's important to understand, right? It's starting to get a lot pricier, but the average person says, well, okay, well, let me just wait till rates drop. Well, guess what? You waiting to rates drop, prices are continuously rising, right? If you look at kind of what the median household price is today, first call it 5 years ago, right? In 2020, it's roughly 40% higher.
And so what about all the extra costs that go into a home, insurance, maintenance, et cetera? Are those part of the 30% rule that we were breaking down?
It absolutely is. And so you actually have to bake into that, right? So it's roughly about kind of in totality about $21,000 per year when you really start backing into it and understanding just how much your mortgage PMI is, just how much your property taxes, and obviously those utility bills, and obviously unforeseen housing maintenance costs. And so when you really look at it, you really want to bake into saying, okay, here's how much my mortgage is, but now what's my PMI? What are my estimated property taxes? And on top of that, a few of the other costs. So I do say, right, when you're thinking about 30% of your gross income, you want to also include some of those costs.
Here to discuss what to expect this year, we have Barbara Corcoran, founder of the Corcoran Group and a shark on ABC's Shark Tank, now in its 16th season.
Hard to believe, isn't it?
My goodness, congratulations on all the success.
They're going to bury me on the set in a few years.
You have a lot of time here. And speaking of time, we want to use some of this time to really help some of the potential home buyers out there. I want to talk about what you're seeing in the housing market right now and some of the tips that you have for buyers who are still trying to set some of these appointments and make the right decisions with their purchases.
Well, it's a little more difficult to find a house today because, especially in light of the lower interest rates, only by 1/10 of a point, big deal, right? Nobody's excited about that being lowered just a little tiny bit. But what's happening now is the sellers that have low interest rates are not putting the houses on the market, and they're not going to put the houses on the market, which means there are fewer homes to choose from. A typical buyer today doesn't get a big choice when it comes to buying a home. And on top of that, they're going to find that they're going to have overbids because there are just not enough houses to go around, and prices also will go up.
And so with that in mind, and that kind of the lay of the land right now, what are your 5 tips for home buyers?
Well, I would say the most important overall tip is always look where somebody else is not looking. And that's always where you find your value. So right now, the 3 areas that, the 5 areas you wanted. 5, I made 5, okay?
3, 5.
Okay, whatever you'll take.
We like listicle numbers here.
Okay. You want to look at the houses that have been sitting on the market a while, not the houses that just come on the market where buyers tend to rush, everybody rushes to go see them. You're going to just do your search based on houses that have been on the market 9 months or longer. Those people are having second thoughts, thinking of taking a lower offer, ready to move, and that's where you want to put your low offer. You want to shop off season. People don't like to shop in the winter time or Christmas time. They think it's a bad time. It's a great time to shop the house because you're not going to have any competition out there, and they're going to be more likely to take your bid. You want to be also very open to a fixer-upper. Today, people don't want to bother with it because it takes upfront cash, but you could always get a construction loan. No problem getting construction loans today, and you could find a fixer-upper and add value yourself if you're willing to just wait a few months to do it. And then the other small tip, but it's an important tip, and I think a lot of people could take advantage of it, is you want to shop for houses with a second entrance. Why is the second entrance important? Because you can create a small unit in the basement or the back of the house where you can offset your insurance costs. So all these tips get you in the area that you want to be in, where you're not going to find other people be shopping and competing with you.
Now, that last tip that you have as well here, and this one gets into my next question, which is what you're seeing in the thought process for potential buyers who are evaluating climate risks right now too.
Yeah, well, it's on everybody's mind right now. It could work for you or against you. First of all, when you're buying a house, you'd be crazy not to check out if you're in a high-risk area, because right away you're going to increase your insurance costs probably by close to 20, some instances 25%. Certainly in the LA market right now, the insurance is through the roof, and of course you understand why. But you want to size it up. But the good side of it is a lot of people are afraid of it. And so sometimes if you're not afraid and you want to take that risk, you can make a lower offer and get a house accepted, get a house you like accepted.
Barbara, while we have you here, I want to turn to, of course, what we had started off some of the conversation with, or I acknowledged at the open, which is your Shark Tank brain, your VC mindset as well. Can you give entrepreneurs some tips for how to nail their pitch to get funding from venture capitalists?
Yeah, I think there are really only 3 things that have to be focused on, and very often people don't focus on when they're making a pitch. Not just on Shark Tank, but in the everyday world. You have to look the part. If you're a baker, you want to look like a baker. You want to leave your apron on. You don't want to look like an investment banker, and many people make that mistake. The second tip is when you go in there, you really want to practice. You want to over-prepare. There's no such thing as over-preparation. People think you over-prepare so you make a better pitch. You make a better pitch because it increases your confidence. That's what happens. And the last is that people making a pitch for their business never, ever answer the most important question on the investor's mind, which is, how am I going to make money on this deal? I will hear pitch after pitch on Shark Tank and on real life, and people don't even address it. That's all I care about. How am I going to make money? So you better answer that right between the eyes.
Are there extremely intriguing business types to you, even right now, to invest in? Because we know some of the VC dollars are being highly scrutinized, going out the door and investing in entrepreneurs, in startups, and in businesses right now.
I think the only important thing to think in mind is you get off track evaluating the business and the numbers. I don't do that. I turn a blind eye, and that's a secondary stop. You really want to investigate, and you really want to evaluate and use your gut instinct on, do you trust the entrepreneur? Because in the end, the businesses that have failed miserably, or people that had second thoughts about the people, even though the business plan was rock solid. But when you really get a good entrepreneur, they're going to find a way to succeed. That's what they do. They succeed.
Barbara, thanks so much for taking the
My
time
pleasure.
here with us today.
I like your
Great
suit.
to see you in studio. Look, I'm trying to hang in the rare air with you, fashion icon, of course, and real estate mogul, plus VC, Barbara Corcoran.
Thank you very much.
Thank you. Here with tips on how to secure the best loan, we're joined by Rulon Washington, who is the Wells Fargo Executive Director of Mortgage Sustainability. Now, Rulon, great to have you back on the program with us. Credit score is king to securing a good mortgage. How can folks improve their credit score in order to get the best mortgage rate?
Yeah, so thanks for having me, Brad. Home buying season is right around the corner. And so as consumers think about buying their first home, they must also think about the credit perspective, right? So enhancing your credit score is the best thing that you can do to really get yourself home ownership ready. So just a few tips that I think are critical. First and foremost, know your credit score, right? Be able to track your credit. When you think about knowing your credit score, there are tons of Americans out there that do not know what their credit score is. And so there are free online tools for you to be able to track your credit and understand what's on there. Also, making on-time payments. That sounds easy in today's climate, but really that's one of the things that lenders look at when you are able to manage a mortgage payment, right? Is how are you able to manage that credit? So making on-time payments is critical as well, too. And keeping your oldest accounts open. There's a thing called credit age. And that's why younger folks may have a lower credit score. And as you get older, that score gets a little bit better. So really keeping those oldest accounts open is critical for you to have a really good score.
What are some of the common mistakes that you see people making when they're trying to get credit ready for a big purchase like a home?
That's a good question. So first and foremost is not tracking your credit score, like not knowing what your score is. is one of the most debilitating things, right? So those free online tools allow you to take a look at your score to see if you have any liabilities that may be on your credit report that may be impacting your ability to get a mortgage. Also, avoid making those large purchases as you are planning to apply for a mortgage. For example, if you're thinking about getting a mortgage in December, don't go out and get that brand new car in June, right? As you think about an inquiry from a lender, that hard inquiry could impact your score when you're trying to get the house of your dreams.
That's a good point there. So ultimately, what are some of the costs that also need to be taken into consideration when you are buying a home and before you even go to the settlement table?
Well, Brad, it's impacted me. So one of the biggest costs is maintenance and repair costs. A month into buying my house 10 years ago, my AC shut out on me. So I had to spend $9,000 to purchase a new AC, right after I purchased my home. So when you think about just the maintenance and repair costs, a lot of folks don't take that into consideration. Another thing to think about is your property taxes and your homeowner's insurance. As a consumer, you can't control your property taxes, right? But every year you're going to have to pay them. If your mortgage is escrowed, you're going to pay them every month. So you think about that along with your insurance. Those are things that you have to make sure you account for when you're doing your budgets and you're financially planning for your mortgage.
When you think about all of the different housing markets that are really being navigated by consumers right now and potential home buyers right now, they're also going to try and get approved for a mortgage, and they're saying, all right, this is the income level that I've got, and
right.
What can I get qualified for based on this? Is there a sweet spot right now where you're seeing kind of one general rule of thumb number be applicable across many different markets?
Well, consumers are in different spaces. And so I think as lenders, we have to meet them where they are. So there are tools out there that are really advantageous for consumers. So many mortgage lenders have various tools that help you crunch the numbers before you make your big decision. A good tool is a home affordability calculator. It helps you calculate your future mortgage payments and help you understand what that sweet spot is. Because really, as a consumer, you need to understand where you are financially in the scope of the home that you want to buy. Yet dream home may be out of reach right now, but as you calculate your budget, it may be something that's attainable in the future.
How do you know when you're purchasing too much home, Rulon?
Oh man, that's a good question, right? I think for us, in our minds, we never know. That house is never too big for us, right? But when you use those tools, it helps you get a realistic view of what you can actually manage. Sometimes that first house may not be the dream house. It may be that house to get you off the ground, that starter home. But then you can build to get that dream home. So be patient as a consumer. Understand your credit, understand your financial situation, and then find the best mortgage for you today.
All right, so I'm not swinging for the fences with a VR golf simulator out of the gate here. Understood. I hear you loud and clear, Rulon. Thanks so much for taking the time.
Thank you.
Zillow says the typical down payment is between 3% and 20%, with average home prices over $320,000. That means most potential homebuyers need between $10,000 and $60,000 saved up. Here is some advice on how you can boost your savings. We've got David and John Auden Schneider, the debt-free guys and co-hosts of Living Not So Fabulously. Guys, a pleasure to see both of you. John, let's start with you. What is the biggest way that you want to advise folks listening to reduce their expenses?
Yeah, you just had several guests in a row talk about how everything is getting more expensive for the American consumer. So some of these tips might have been unheard of even 3 months ago, but they're becoming more common today. One advice we have is that you move in with friends or family to offset some of your costs. We have 2 clients who've actually done this. One client of ours was able to save over $10,000 in 1 year by living with his mom and dad. Another recommendation that we have is maybe it's a tight market in most of the country, maybe not in the South or Florida, but now might be a good time to consider selling your current home, putting as much of that profit into a high yield savings account and waiting until later when you can either buy a bigger home or when the opportunity is more appropriate for you and your family to buy the right size home. In the meantime, maybe live with mom and dad or maybe downsize to something smaller. And then a third suggestion is maybe looking at some of those things that were luxuries once upon a time, maybe cutting those out, like DoorDash and Instacart subscriptions. We're paying anywhere up to $924 a year in subscription services alone.
Yeah, it's really interesting. I always tell people to look at their biggest buckets of expenses and how they can cut that if they're trying to save. So I'm glad that you brought up the great point about housing costs. David, what are you looking at in terms of some ways to save up extra money?
So one of the things is that now is the opportunity, especially with the gig economy, for folks to figure out ways in which they can earn just a little bit of extra money. We're seeing a lot of individuals who are wanting to either pay off debt or are trying to save for a down payment are doing things like freelancing or starting a side gig. We actually know clients of ours who they pet sit through Rover on the weekend and are making somewhere between a couple of $100 to over $1,000 a month that helps them save for that down payment. The other thing is that if if you're getting ready to move, you probably have a lot of stuff you don't necessarily need anymore. So go out on Facebook Marketplace or Craigslist, places like that. Start selling the stuff that you aren't using and put that money aside for your down payment.
Yeah, it's a really great point too. And John, I know you're also monitoring some personal accounting changes you can make so that you can maximize your saving. I love the sound of that. What does that look like?
Yeah, one suggestion is you can adjust your W-4 so that you get more money every paycheck, twice a month or every other week, have you. Just remember that you might have a little different tax bill come the end of the year, so you definitely want to make sure you do the math to make sure it makes sense for you, as well as talking to an accountant. Also, do a strategy that we call send it before you spend it. As soon as your paycheck comes in, go ahead and pay whatever bills you have to pay within that duration of your pay period, so that you don't think that you have extra money around that you don't necessarily have to spend. And then finally, there are some amazing cash back and rewards credit cards out there right now. Take advantage of those to the extent that you're able to, but make sure that you remember that somebody's subsidizing all those rewards, and you don't want that to be you. So pay your credit card off every single month.
I love that. So well said. David, I also want to get your take just on how much money you should think about having saved before you even pursue the idea of buying a home. What's a good kind of range?
Yeah, I think this really depends. You showed a stat earlier, anywhere between 3 and 20%. But if you're using one of the local or national programs that are for down payment assistance, then look for the guidance that those programs actually provide. In some cases, you may not have to have a down payment at all, depending on that program. If you are looking for a conventional loan, then please find a qualified mortgage broker, whether that be through your local bank, credit union, or even an independent individual. They're going to be able to not only find you the best rate, but they're also going to help match up that down payment to your particular financial needs. But keep in mind that just because they say you can afford it doesn't necessarily mean that you can. We want to keep in mind that there are also other expenses related to owning a home. Insurance is one of the big ones right now that is being talked about, and as you mentioned, in Florida and in the South, especially because of natural disasters.
Yeah, it's important to look at the totality of those costs. A lot to think about. I will continue to be renting in my New York City apartment until I retire and move to Florida someday. But you guys give me hope that I can do it. So thank you so much, John and David. I really appreciate you guys. Thank you.
According to an April Redfin survey by Ipsos, 13% of current homeowners received cash gifts from family for down payments on a home. And nearly 17% who soon plan to buy said they plan on using cash gifts. And if you're getting help, there is a little extra paperwork that you'll have to deal with. Americans receiving gift funds for their home purchase likely need something called a gift letter. Here to explain, we've got Rulon Washington, Executive Director of Mortgage Sustainability at Wells Fargo. Rulon, great to have you back on the program. So can you just explain what a gift letter is and who exactly needs one?
Well, Brad, it's wedding season, so that's a great question. Gift letters are one of the keys to validating where gifts are actually coming from, right? And so it's the lender's way of making sure that that gift that you're receiving is not a loan or something that needs to be repaid. So verifying your income is a critical step in the lending process. So it's best to work with your lender to understand the specific rules around the loan type and provide that necessary documentation to verify the funds. So that way they are in fact labeled a bona fide gift. Gift letters are one of the many ways to validate, but they're the key reasons for you to be able to describe where those funds are coming from.
What information is usually in these gift letters? It's not just, hey, congratulations, you've made this huge milestone in your life and here's some money. What typically has to be in it?
Yeah, so the donor, it's usually information around how they were to be able to provide that gift. There's going to be an area for you to sign, a signature area as well too. Ultimately, what could happen is it could be a handwritten letter or it could be a template that could be provided by your lender. So it's standard information, but the goal is to get enough information on that letter to determine that it is truly a gift, right? So it's a signed testament saying, hey, this is a gift for you. It doesn't need to be repaid. It is not a form of a debt. It is not a loan. So the gift letter can be standardized, but it needs to be signed by both parties, the gift and the also donor.
Now, excuse me for if this sounds very basic, but if a couple gets married and someone stashes $100 in a card and writes, enjoy your first home as a married couple, is that considered gift funds, and do you need the letter for that?
Good question. So timing plays a big part in that, right? So if your lender's looking at your bank statements and they see a $100 deposit from 3 months ago, they're probably not going to bug you about it, right? But What the issue is when there's multiple deposits that are in that bank statement and that lender's trying to identify if that's a form of income or if that's a loan, right? So that $100, that gift letter is always important to provide some validation to what those funds are for. But ultimately, $100, it's not that big of an issue. The larger amounts are when you really have to be providing tons of documentation. So they're a bit more scrutinized when you get the $1,000 or the $2,000 in that deposit. But $100, depending on the timing, if it's season fund, which means it's at 60 days plus in your bank statement, it's usually a little bit better, a little bit easier to validate those funds with your lender.
There are different requirements typically, right? Depending upon the type of home or the loan that you're seeking for that home, and what might they be?
Yeah, so for a conventional mortgage, usually when you're getting a gift, it's focused on your primary residence for a second home. Usually investment properties, you're not able to use those gifts, right? And then you think about an FHA loan or a VA loan, gifts, they're a little bit more lenient, right? So you're able to get a gift from a family member, a friend, a coworker, someone from the union, someone from your church. And so there's a little bit more leniency. But with FHA and VA loans, you're not able to use those gifts towards a second home or an investment property. So speak with your lender and really try to get an understanding of what some of the rules of engagement are around using gift funds. The property types do vary, but having that conversation with your lender could put you on the straight and narrow.
And so this starts to get into this next question of how the requirements essentially change if it's your primary residence versus a vacation home.
Right. So a conventional mortgage, it's a second home, right? If it's a part-time home and you're not using it for an investment, you're able to use those gift funds. Really, the gift funds are just a form of down payment. When you think about using gift funds towards a down payment, it's essentially helping you buy down the unpaid principal balance when you're taking out the loan, right? So essentially, we want to make sure as the lender that you're able to afford that current mortgage. So if it is a second home and you're living in there, you're not using it for an investment property, gift funds can be used for a second property like a vacation home.
Rulon, thanks so much for the tips as always. Good to see you.
Thank you.